Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 13th of August, Wednesday. It's been a flat day and the markets are in a consolidation phase. The week has been okay. It has seen both ups and down. And the interesting thing is that Nifty is now been flat for almost 1 year now. And the valuations that we had seen in September 24, which peaked, the valuations have come down and we are going through a time correction. As we speak, we are still about 7-8% down from the top that we created in September 24. And Nifty has been making a lot of efforts to try to scale back to 25,000, then 25,500, 600, but 26,200 is elusive. It is nowhere to be seen. The week to week data keeps on changing, and that is actually dependent on a lot of news flow that keeps on coming. A lot of things were unanticipated. For example, the tariff that India has been hit with 50% tariff, that was not anticipated, that we will be one of the highest tariff countries in the world, which US is going to impose on us. That was not anticipated, and that is one thing that is not being factored in by the markets, and that's why the markets have now started reacting to that, and we have been in a consolidation phase. Also, a lot of other things have happened. For example, the inflation numbers came out. They have been at a 8-year low, so that is one good news that has happened. And another number which came out over the weekend was the mutual fund inflows at 42,000 crores. So that also is like a very good number that markets can take heart from. So there are some positives, some negatives in the market, which is always the case, and market is stuck in a range. So let's see what is entailed for tomorrow and the next week going ahead, and how you should position yourself. So let us start with the Nifty 3-minute chart today. As you can see that it has been more or less a flat with slight upward bias, and that upward bias is also because there is a lot of put writing that has happened. And if you see, this is the Nifty daily chart. So in the Nifty daily chart, what you can see over here is that then we have, after making this bottom at 24,300, testing it 2 times, we have started to go up slightly. So you can see that we are at about 24,600 odd now as we speak, and we have made this slight green candle. Let's see whether this sustains or not, because if this 24,300 doesn't sustain, then we are looking at a deep cut. The next logical target then will be 23,900. So that is like almost 700 points from here. So that is something that we should not break, because if we break that, that will be not very good news from the market. The uptrend is definitely broken. So if you see, the uptrend that we had made definitely got broken. And if I just draw a trend line to see over here, you can see that this was one uptrend that got broken, and we have not really been able to recover post that, and this is where the market started sliding in. And this was one way rally, you can say, in a way, which culminated at 25,600. And after that, once we broke that, we have seen a lot of lower levels starting to happen. So Nifty is in a slight upward trajectory right now for the last 3-4 days, you can say, after making that low. But that low is not a very stable low, and we'll have to see whether that low is respected or not. Now coming to the open interest, this is where it gets interesting. The open interest started with a very, very negative bias, but look at today, there have been 8 crore puts that have been added versus 2 crore calls. So that tells a big story. It can be construed as a good news, and once this tariff thing is resolved, then we can expect that the markets will make a dash towards the new high. This is the data for the straddle price. As you can see that the straddle price has decayed a bit. So it opened at about 147, and there has been some decay in this week's options. And as you can see that we are closing at 121, which is not optimal, but it's okay. I mean, we are going to open at 100 tomorrow, so make as much as you want to from this. When Nifty starts to move, the movement itself is some 200-300 points on a given day, so up and down in each move. So actually, if you see, the movement will be 500,000 points also some days. and for that you are fighting for a 100-point straddle. So it's a hopeless scenario in terms of the options prices, if you ask me right now. But this is what it is. There are too many sellers in the market, and this is what the option pricing is showing us, that 100 points are there tomorrow. You can realize as much as you can. Now this is how the sectoral indices look like. So today, pharma and metals did really well, both up more than 1.5%. Metal is about 1.4 and pharma is about 1.8%. Autos did well at 1.2%, and mid cap finally is up 0.81. Small cap is also up 0.77. They had taken a beating for a couple of days, and financials are taking a breather at 0.54, and FMCG is the least with 0.05. VIX is down at minus 0.88, which is good news for us. If you look at the performance of the various sectors in the last 1 month, IT is the worst performer at minus 6.69, and small cap is starting to go down. It's down minus 6% because of elevated valuations, I would assume. Nifty Energy is down minus 3.9, public sector enterprise minus 3.8. The sectors that have done well as auto, metals have been flat, and pharma has been kind of flat. So this is the performance of the last 1 month. And as you can see, over here, that the point to discuss over here is that Nifty, as you can see, is basically flat for the last 1 year. It's just showing 2% up. So that's basically a flat return for last 1 year. And whenever such periods come wherein returns for 1 year, 3 years kind of go flat, then it's usually a good time for accumulation, because Nifty in the long run will tend to give about 10 to 12% returns, and if for last 1 year you're not getting very good returns, it's somewhere evening out, but also it basically shows that it might be a decent opportunity to add something. Now coming to one news that caught the eye: India is now least favored Asian stock market, according to Bank of America survey shows. And in the most recent fund manager survey, 30% said they are underweight on India, followed by 20% Thailand, 10% for Malaysia. So these kind of reports will also come, when the markets are going down. But it also, highlights somewhere that our valuations have been very, very high. And this is the chart that you all should see, which is basically the Nifty 1 year chart. You can see that we had made a low somewhere in February, and then again in March. In April we made a low, and from there we have really bounced back. So 1 year return, as you can see in Nifty, has been flat at 0.42%. Last 5 years, however, if you see, we have grown by 116. So basically index has doubled in the last 5 years, and that is also from somewhere near COVID lows. But if you see long term averages, it will come to 10 to 12%. 1% ad dividend yield, so it's about 12 to 13%. So that is what one should expect, and as we go along, as a nominal GDP and inflation comes down a bit, now then 10 to 11% probably will be par for course for the big indices. Of course, in small and mid caps you can end up making 1 or 2% extra. Now let us look at how the international Qs are. So US 10-year is at 4.84, which is fine. US 30 is at 4.84. US 10 years at 4.25, which is good actually. It had, anything below 4.5 for US 10 years and 5 for 30 years is good. S&P VIX is down at 14.5. Nasdaq is making an all-time high every day for the last 6 months. It's been, well, at least since April 7 tariff day, it's just been making new highs. It's unstoppable, and these concentration of these big Mag 7 companies has been increasing, so that is something to watch out for. US dollar index is at 97, which is good. Our currency is at 87.5, which is okay. Brent oil is going down at 65.94, which is great. Gold is again making an all-time high. This is very interesting because also I was just seeing in terms of sovereign gold bond, they are trading at a premium to their fair value. So that is something which is very interesting I saw today. And gold basically has been going up. It's a one-way street. It's a hedge against currency. It's a hedge against inflation. It is a hedge against everything, against even your equity, because it's got a negative correlation with the equity. So I've been maintaining this for a long time, that gold should be 10%, 5 to 10% of your allocation. For me, it was about 8-9% allocation in gold, but it's just that it has gone up so much that allocation keeps on increasing on its own. So right now my allocation probably is about 11.5% in gold. There's no complaints because it just keeps on going up. For the last 1 year, it's just been one-way rally in gold. and it hedges you, protects you against dollar, it protects you against market falls, it protects you against inflation. So gold should be a part, and we have seen that in the prices as well. So international cues are all okay. Gold is making all-time high, US markets are making all-time high, a lot of Asian markets are making all-time high, European markets are making all-time high, Japanese markets are making all-time high. So we are not. Hopefully, we will also. So you just have to stick the course and keep on investing. Keep on investing sensibly through mutual funds. If anyone is interested in making a mutual fund portfolio, they can contact me through the form, Google form given in the description below. I help people make strong, robust mutual fund portfolios. So if anyone is interested, they can fill up the form. If you want to join my WhatsApp group, you can again fill up the form and write over there you want to join the WhatsApp group only, and I shall include you in that as well, where I share my knowledge. So that's it. Actually, the markets are looking okay. The PCR is fine. So tomorrow's expiry, as of now, looks like it should be contained unless this PCR again changes and you know, if I start resuming the selling, etc., then nothing can be said. But as of now, the indications are it is fine, and we actually might see a step up bounce. I mean, a surprising bounce also. So we fall, Friday is a holiday, so markets will be trading for one day less for next week expiry. So that we also have to keep in mind. So all in all, it looks fine. So that's it from me now. If you like my content, please do like my channel. Please do subscribe to it, and please do comment. I shall see you soon tomorrow with another update. Take care. Bye bye.